All right, you all are welcome. You are welcome to CryptoBase Media. You are welcome. Okay, more people are just joining in. Okay, so let's proceed. Yes, sports versus futures trading. Which one should you trade? Which kind of trading method should you use? Okay, so firstly, let's look at what trading is. What is trading? What we know as trading traditionally is buying and selling of a good or a service in order to make profits. So definitely that is trading. That is trading also. You are going to buy or sell any item, be it a gold wristwatch, a gold necklace, or all of that. You bought a gold necklace for the price of let's say 200,000 naira, and then you're about to sell it. You sell it for around 300,000 naira. So you are going to get your own profit of 100,000 naira off it. That is trading. That is just trading in the local way. That is normal trading, what we all know as trading. Now, cryptocurrency trading is now buying and selling of cryptocurrency assets. We all know cryptocurrency assets as digital assets that can be seen but serve a lot of function. So cryptocurrency, all of those coin, Bitcoin, and all of that, they have their own function. There is what they do, all of those borderless payments and all of that. Now, the fun thing about them is that money can be made with those coins by trading it, by buying and selling those coins. All of those DeFi coin, all of those NFT coin, those Ape coin, and all of that. All of those coins have their own uses. They have their own usability. And at the same time, cryptocurrency traders make money by trading this coin, by buying and selling it. When it is at a low price, you sell it later at a high price. Now, that is basically what cryptocurrency trading is. Now, the next thing to look at is what is spot trading. Now, spot trading is simply, or let me say, is easily known as buying and selling of cryptocurrency assets in the spot market. It is called the spot market. Okay, sorry guys, I'm going to be admitting some people along the line, but that shouldn't disturb us at all. Okay. Oh, more people are joining in now. Don't worry, if you are just joining in, don't worry. You've not missed the lot. You're still on track. You've not missed the lot. So spot trading is simply buying and selling in the spot market. And for every buyer of a crypto coin or of a cryptocurrency, there's also a seller at the other hand. If I'm buying a coin at $100, there is also somebody that is selling to me at the other end. Now, where do these buying and selling takes place? They can take place on exchanges, and we can have centralized exchanges and decentralized exchanges. But that is not the topic for today. So basically, the exchanges are going to bring the buyers and sellers together. They're going to merge the buyers and sellers and make sure that the buyer gets what he wants to buy and the seller gets what he or she wants to buy. So it's basically connecting buyers and sellers together. And on spot markets, you can buy a coin, you can own the coin. That is what trading there is. And if the coin has increased in value, you can as well sell so that you can enjoy your profits. That is what spot trading is. Now, I haven't understood the meaning of spot trading. Now, let us look at what futures trading is. A lot of people have seen screenshots for futures trades, all of those profit and all of that, but they're still confused and still don't know what futures trading is exactly. They don't even know that it is called a futures trading. They don't even know what it is called. So futures trading, I would like to put it in this way. Futures trading is basically betting on the future price movement of a cryptocurrency, of a coin, unlike the sports markets, whereby you buy a coin, you own that coin. In futures trading, you don't own a coin. What you do there is that you bet on the future price movements of a coin, either the coin is going up or coming down. If Bitcoin is currently $23,000, and then I want to bet on Bitcoin that, okay, Bitcoin is going to increase based on my perceived analysis and information I took from the market. I can say, okay, I want to take a long on Bitcoin. That is me betting that Bitcoin is going to increase in value. That is me betting. That is me longing the coin. That is me betting that, okay, Bitcoin is going to increase in value. And as well, in futures trading, you can as well bet that a coin is going to reduce in value. Now, when I'm talking about betting here, I'm not saying something like these NeraBet and all of those gambling platforms. No, that is not what I'm talking about. Cryptocurrency trading is not gambling. Even futures, it is not gambling. You know, a lot of people see it as gambling. That is why they don't set their risk, they don't manage their risk, they just lose their money. You know, gambling is one thing that you can lose your money to at once. But in cryptocurrency trading, when you learn from the right people, there's systematic way in which you carry out your trading, either it is long or short. Either you are betting that the coin is going to go up or the coin is going to come down. So that is that about futures trading. Futures trading, you can either long a coin or you short a coin. You know, if Bitcoin is in 25,000 and then I said, okay, Bitcoin has to come down based on my analysis and all of that. So I now take a short on Bitcoin. That is me predicting the next price movement of Bitcoin. That is what futures trading basically is. So it's not like I'm holding a coin or I'm buying a coin or physically owning a coin. No, that is not it. It is basically betting on the futures price movement. But yeah, Binance, Huobi, KuCoin, Bybit, or whatever exchange you use, they are your broker. You know, that is what it looks like here. They are the one that are going to collect the money from you and then use it to place your future. So that is basically what futures trading is, you know, betting on futures price movements of a coin. Either the coin is going to go up or come down. And if you are right, you are going to enjoy your profits from the coin. So in futures trading, it is possible that you profit from a coin going up or you profit from a coin going down. It depends on the side that you choose. So that is basically what futures trading is. Now, let's take a look at the benefits of spot versus futures trading. Now, if you are with your phone, you can as well screenshot this. Don't worry, it is free to use. You can use it anywhere you want. Okay, so benefits of spot versus futures trading. You know, a lot of people mix it up and they don't even know the difference. So I've explained earlier, for the sake of those coming in, spot trading is basically buying a coin, owning that coin, and then selling the coin at a later price, you know, for a profit. That is what spot trading is. And then you do that repeatedly. But futures trading is basically betting on the future price movements of a coin. Either the coin is going up or coming down. So in futures trading, you can as well make profits from a coin that is coming down, and you can as well make profits from a coin that is going up. You know, the way everybody's calling Bitcoin going down, Bitcoin is dumping, you know, all of those days when the bear market was still fresh, everybody was shouting, it's going down, it's coming down. You know, futures trader make good use, they leverage on that particular movement. So a lot of profits will be made by futures traders who know their onions in futures trading, even in a bear market. So that is how it works. Now, futures trading gives you an edge, either it is in a bullish market or is in a bearish market, and it has a lot of advantages. So I'm going to be looking at some of these advantages of futures trading, which I call the benefits, and I'm also going to be looking at the benefits of spot trading also. Now, okay, here we have it. I've said it earlier. You can as well screenshot this. So let's look at spot trading first. Spot trading is risky. Yes, it is risky, and futures trading, it is more risky. Spot trading is risky, but futures is more risky. You know, cryptocurrency generally, we know cryptocurrency as a very volatile market. So that is why it is risky. You can put your money now, buy a coin now, and the coin can dump or pump in like 20% or 30% within some minutes. That is what a volatile nature means. So for spot trading, it is risky. That is why you have to set your risk management. You have to have all of your risk management measures in place. But for futures trading, it is more risky. Why did I say this? Why did I say futures trading is more risky? Now, aside from betting on the future price movements of Bitcoin in futures trading, you can also increase the value of your money that you are using to bet on that future price movement. And then I'll explain what I mean. That is leverage. That is what is called leverage. Now, that is where the next point comes in. Now, with spot trading, you trade with what you have. You don't use any leverage. Now, trading with what you have means if you are going in with $100 on spot trading and you bought a coin with $100, let's say Bitcoin, you bought Bitcoin or Ethereum, for instance, bought Ethereum with $100 and Ethereum pumped 10%, your $100 will turn to how much? it will turn to $110. Now, if Ethereum dumps 10%, your $100 is going to reduce by 10%. That means your $100 will now be how much? $90. So that is that for spot trading. Now, for futures trading, it gives you an edge, with the leverage function that is inside futures trading. You can increase your capacity. You that you are going in with $100, you can as well increase your $100 to $500 to $1,000 as much as you want it. So increasing your money from $100 to $1,000 before you even take any trade, it is using a 10 times leverage. Of course, 100 times 10 is 1,000. So you have a $1,000 position to trade. So that is it. Now, if that kind of trade, if it goes up 10%, okay, I think I need to admit more people in now. Okay, great. Okay, I think someone is saying something in the chat. Okay, so now I hope everyone can hear me. I hope everyone can hear me clearly. I hope you all can hear me clearly. So as I was saying, the leverage, if you now have a $1,000 position, you are going in with $100 and 100 times 10 gives you a $1,000. So if the coin Ethereum, if it moves 10%, you are also going to be enjoying the 10% move in profit. So your $1,000 will not just go up by $10. Instead, it is going to go up by $100. So it is going to be like 10% of $1,000. That is what you are going to have. Why? Because you are trading futures and you are using your leverage. That is what it means. It's almost like you are borrowing a coin to trade. Now, I mean, it's almost like you are borrowing more money to trade. You are entering with $100, but you are borrowing $900 more to trade. Now, it has good side and it has bad side. Now, the way you are going to gain $100 when you use a 10 times leverage and the market moves 10%, is the same way you are going to lose that money if the market goes down 10%. You are going to lose the $100 when the market goes down. So that is why I said it is more risky than the spot trading. So more risk, the higher the risk, the higher the reward. The higher the risk, the higher the reward. That is how it works, guys. And that is like the difference between the two. Now, you own the assets you buy in sports trading. When you are trading on sports markets, you are the owner of your assets. Either you are buying from a decentralized exchange or you are buying from a centralized exchange like Binance, KuCoin, Huobi, and all of that. You own your assets. If I buy Bitcoin on a centralized exchange, I'm the owner of my Bitcoin. I'm going to be seeing my Bitcoin, then I'm going to be seeing my value, the value of my Bitcoin. But on futures trading, I am only betting on the I'm only betting on the future movements of the coin. I don't actually own that coin when I'm trading on the futures market. Now, hold on, guys. I know some of you are going to have questions. So hold on. When there's time for question, you have the opportunity to ask your questions and you get everything clear. So in futures trading, you don't actually own the assets. You are only betting on the future movement of that asset. So when you open a long position, once that long position, you are satisfied with your profits, you can close that position by opening a short position again. So that is how futures trading simply works. Now, another benefit is you can only make profits when the market pumps. In spot trading, you can only make profits when the market pumps, when everything is going. That means when we're in a bullish market, Bitcoin is pumping from 50,000 to 20,000 to 30 to 40 to 50 to $60,000. All of those profits made, it is when you buy Bitcoin, that buying, it is basically done on the spot market. It is done on the spot market. So that is the advantage that the spot trading will give you in a bullish market. That is the advantage it's going to give you. Now, when it gets to futures trading, you can make profits either ways. Either the market is going up, pumping crazy. You can long a coin, you take your profits when you're okay, when you're satisfied, or maybe the market is going down, short a coin, take your profit. So either it is a bearish or bullish market. Futures trading is designed in a way that it is going to make you profit as long as you know how to do your analysis, you know how to do your technicals and all of that. Then you don't have problem trading futures trading, and you are going to make massive profit from everything. Now, sports trading doesn't require much knowledge on technical analysis. Yes, you need to know technical analysis, at least the basic one, the support, the resistance, the trend line, and all of that. But you don't need to feed yourself with overload information when you're trading the sports market. But when it comes to futures, yes, you need to learn. You need to have the expertise. You need to have the expertise. You need to learn technical analysis, take courses, advanced courses in technical analysis that is going to help you. And the thing is that when you are investing in courses like that, you're investing in yourself, you're investing in your mind, training yourself in order to be able to trade that kind of market. Now, when you get there, you are definitely going to see the profit later on, just like an investment. No matter how expensive the cryptocurrency trading cost is, you are definitely going to get the profits later on. So, the last one I wrote here, it is not limited to these anyway. There are still more advantages of both spot and futures trading. But for the sake of time and for the sake of this class, the next one is the sports trading is easy to trade for newbies. If you can ask almost all newbies, they will tell you that if you can ask almost all expert traders, they'll tell you that they started with sports, started with buying Bitcoin, and then waiting for the Bitcoin to pump and then selling it. So that is how each and every person started. So it is easier for a newbie to start with spot trading. So if you're in this Zoom session right now and then you're a newbie, you don't really know anything about cryptocurrency trading, and you're just starting out or you're just taking your courses. So it is advisable for you to start with sports trading. It makes more sense there. When you can make your profits very well in sports trading, then you can say, okay, you've learned enough technical analysis and then psychology and all of that. So you want to advance to futures trading. That is fine. So that is fine. So futures trading is made for experienced traders. When you're experienced, you've seen the sport, and you've known how everything is programmed, how everything works. So you don't just enter the futures market anyhow. You don't just enter anyhow. You are going to make sure that you are entering with the right knowledge. You are entering with the right knowledge. Okay, so the next thing we are going to be looking at is, okay, now to the big question of the day. Should you trade sports or futures? Which one should you trade? With everything that because we are in a bear market, maybe that is why we have majority of futures traders, because definitely in sports trading, in futures trading, you can make profits either way. You can make profits long in a coin or short in a coin. Don't worry, if you have a question, you can save it or write it down somewhere. There's going to be time for asking question. Okay, great. People that trade sports at this particular period, I hail you guys, because honestly, trading sports markets at this particular period is definitely not very easy. Maybe aside from the past 2 to 3 weeks, the market has been pumping, the market has been pumping and all of that for the past 2 to 3 weeks. So I can say you guys are still okay. Okay, now, if you are still confused and you don't know which one you should trade, either sports or futures, or maybe you are not making the kind of profits you want in either of the markets you are trading, either future market or sports market. Now, this is these factors are what you should also consider for you to be able to be guided in which one exactly you should trade. So, okay, so number one is your expertise. Now, if you want to choose your own trading style, or you want to choose the markets where you should trade in, look at your expertise. How many months or how many weeks have you been in the market? Since when have you been trading? Have you traded sports before? Are you a newbie or you're an expert? Now, if you have enough expertise and then you feel you have enough knowledge, enough ability to take on futures trading, you can take on it. But if you feel that, okay, the thing is, I are not lying to yourself. You know your own capability. You know your own capacity. You know what you can do. You know what you can't do. If you know you can't stand it, you can't stand the futures market, just trade your spot market. You are still going to make your profit. Although in a bearish market, it might not really be much. You can just see your 5% profit and take it, and you'll be okay, and you'll be good. And maybe when it's already in a bullish market, you can as well start making good profits. So it depends on your expertise anyways. It depends. Just look at yourself and choose the right one for you. So the next factor is the market movement. So either the market there are some times that the market is going to be volatile. and the market is not going to be volatile. You know, there are sometimes that there is not enough volume in the market. There will be indecision. You know, I don't know if you guys have heard about indecision before, but indecision in the market means no one knows where the market is going. You know, the sentiment is an average. You know, people are not longing, people are not shorting. People don't even know what next. Some people are just waiting patiently to see what the market is going to do next. So in that kind of moment, it is advisable to at least, let's say, trade futures. Why? Because the movements in that kind of uncertainty is going to be small. You can just see coin doing small 2% pump or 1% dump or 3% pump, and it is very, very annoying, very, very annoying. Now, for somebody trading spots, is it that 2%? Will you be enough without 2% profits? I doubt it. Why? Because there's indecision in the market. There's not enough volume to pump any coin in the market. So that is the volatility not present. But when the market is volatile and then there's enough volume, sports traders can be good. But when there is just 3% in all of those 4%, 2% move that the market is doing, then you can say, okay, you want to go to futures, because futures is actually going to allow you to leverage on your capital, you know, so that you can make more money. You can use more leverage. But make sure you are careful with the leverage you are using. Make sure it is not too much leverage, and make sure that you are managing your risk properly. That is the most important. So, okay, the next one, the next factor is the time you have to sacrifice for trading. If you are the kind that you are very busy, you're a 9-to-5 worker, you know, you go in the morning, come back in the night and all of that, I advise you don't even go to futures. You can only go to futures maybe if you just say you want to long a coin and you don't mind if your trade is going to go on for 2-3 weeks. You know, your position will still be open as long as you're trading perpetual futures. You know, it's still going to be open. Now, but if you know you have time, you know, you can analyze, you can sacrifice at least 1 hour or 2 hours analyzing coin and trading and everything in a day. You can as well opt in for futures trading because it is actually going to help you. All of those analyses can help you, and then you can enter into 1 or 2 trades, make profits, get out, do it again, repeat it again, rinse and repeat, you know, and again and again and again. That is how the profit is made over there. So another thing to consider is the size of your capital. Now, most sports traders, there is enough money to trade the sports market, you know, to buy and then to sell. You know, when that 20% money comes in, that 20% profit comes in, it is okay and they're satisfied. But for somebody that has a low capital, you know, don't let me say a really low capital. Let me say somebody that, okay, still the same English, someone that has a low capital, you can as well opt in for futures and say, okay, let me leverage on this capital that I have, you know, turning a position of $20 to $100 with a 5 times leverage and all of that. So people make use of futures for that purpose because of the low position or the low capital that they are using. And also, one thing is that big guys, the institution, the whales also make use of the futures trading, the leverage function in the futures trading. Now, if they want to open a position of around, let's say, $500,000, it's not like they don't have $500,000. They can have the $500,000 in savings somewhere, but they can only carry, let's say, $100,000 to, that's even too much, maybe $10,000 to their futures trading accounts, and then they will make use of the leverage. They make use of the leverage and increase that money to $500,000. So that is how the institution traders, that is why they also make use of the futures trading. And then when they are going to move the market, the movements will be much. The movements will be much because their own position is much. Now, another thing is risk management. If you know you are not so good with your risk management, you know, you get angry easily when you lose trade and all of that, it is better you stay away from futures. Just trade your sports markets jejely. Just trade your sport market and continue with buying and selling and all of that. But if you know you can follow rules, you can keep to rules, you know, you are not the type that bends rule. If you know that you are very rigid with your rules and you are well self-disciplined and you can do risk management very well, then you can opt in for futures trading. Because without your stop loss, without your risk management, forget it. You blow your account in no time. Now, another thing is the condition of the market, either bearish or bullish markets. Now, you know, in a bullish market, we are going to make profits in sports trading very well. When you're in a bullish market, it is very, very easy to make more profits in a bullish market. Now, that is that for sports. But when it comes to futures trading, you can make profits from either of the movements. Either of the movements, that is it. So these are what you should consider. If the market is currently bearish, you can try and say, okay, let me opt in for futures trading since the market is moving down more than it is going up. In the bearish market, you are going to have the markets can go down like 20% and come up like 5%, goes down again 10%, come up like 2%. So that is how the thing works. When it gets to a bullish market also, the markets can pump 20%, come down 5%, pump another 30%, come down 2%, pump another 50%, come down 3%. So that is how it is. In a bullish market, you are going to have more bull runs, than more correction than the corrections, and then in the bearish market, you're going to have more dips than the pumps. So that is it. Very, very easy to understand. Okay, so that is it, guys. If you have any question about tonight's session, you can as well ask them. So let me know if you have decided on the kind of trader you want to be. Let me know in the chat session also. Let me know. And then if there's one thing you enjoy about this session, let me know in the chat session. Come on, just drop everything in there. Okay, Chidera said, when holding coins, what's the best way to know when to buy and when to sell and buy again? Okay, when you are holding a coin, the best way to know is, one mistake that most people make is that they don't take profits. It's very, very bad. When you look at your coin, the coin pumped from when you bought it, you are seeing your profits, you're looking at, let me tell you something, the profits you are looking at is not your own. There is something futures traders know. If you trade futures, you're going to know what I'm talking about very well. It is called unrealized PNL. It is called unrealized profits. Now, if you are trading spot markets and then you are seeing your coin increasing in value, you did not take profits, you did not sell. One thing is that profit you are seeing is not your own. It is unrealized. It is not yours. Until you take profits, until you sell the coin. Now, don't get me wrong. I'm not saying you should go and start selling your coin or all of that. But the thing is that when you see a coin that is pumping and all of that, you should take your profit systematically. You should take your profit systematically. Like, you can take some profit now, take another one later when the coin pumps. So if you have some knowledge about technical analysis, like support and resistance and levels, when you can draw your levels on your charts, then you can take your profits at specific levels. When you bought the coin on spot trading and the coin is pumping, you can take the profits. You can maybe say you want to take 30% profit at the next resistance, another 30% profit at another next resistance, another 20% profit at another resistance. So that is it. And then there is a lot of reasons why people opt in for futures trading. Number one, insufficient funds. Another reason is because of the condition of the market. And that is it. But one thing that is about futures trading is that you can make profit either ways, either pumping or dumping. And then futures trading is not only about leverage. You can trade futures, bet on price movements, even when you are not increasing your leverage. You can as well use a one-time leverage. When you enter with $1,000, it is still your same $1,000. It has not increased because you've not increased your leverage. So it is as easy as that. Okay. Okay, Chidera, I hope your question has been answered now. Okay, Edwin said, can one do 1TA and FA for sports and future and get a better results? Can one do 1TA and FA for sport and future and get a better? Yes, of course, you can. Of course, you can use the same fundamental and technical analysis on your sport, and then it will still work for your futures markets. It will still work. It is still, since it is the same chart, it will still work, of course. But the thing is that most futures traders prefer to trade and do everything fast. Most future traders are day traders, and then they prefer to do it fast, very fast. When they buy a coin, they long a coin, they take profits very fast. So, but sports traders tend to say, okay, let me hold on a bit. Or those sports traders that hold the coin, that they have huge capitals. There are some sport traders that enter with huge capitals. Thousands of dollars. Hundreds of thousands of dollars to enter a particular position, and then when the coin moves like 5%, just quick scalp. They are okay. They will sell the coin and they are fine. So I hope that answers your question. Okay. Gabby said, on futures trading, which leverage brings more profits, no matter the margin used? The thing is that, okay, if you're asking this question, that means you don't really understand what the leverage means. when you are using your margin, okay, let's say you are using a margin of $100 now, and then use a 2 times leverage on the margin of $100. 2 times of $100 is what? That's $200. So the thing is that when you when the market moves, let's say the market moves 30%, you that use a 2 times leverage, you'll be enjoying a 60% profit. Do you get it now? And then if the market moves down 10%, you that use a 2 times leverage, you'll be taking a 20% loss. That is how it works. So everything depends on your own style. Use the kind of leverage that fits you the most. Use the kind of leverage that, don't look at the profits when you're looking at leverages. First, look at the risk. Look at the risk management. Look at the money you'll be losing when the market does not go your way. If you lose this particular money at this particular time, will you be okay? Won't you get mad at yourself? If you haven't checked our YouTube channel, check it out. I'm going to be pasting our YouTube channel link. Check, there's a video where we talked about risk and reward ratio. Check the risk and reward ratio video, and then you see how to set a good risk to reward, such that when you take trades, and then even if your win rate is like 50%, if your win rate is like 50%, and then you won 5 trades out of 10 trades, at least you still be making more profits that way. So that is it, guys. Okay, let me see the next question. Okay, someone said, what's the function of Bollinger Band and MACD? Okay, good question. Bollinger Band, it is basically to know volatility. Bollinger Band works with volatility. So when you see the Bollinger Band squeezing, when it is closer to each other, there are 3. When they are closer to each other, that means there is no volume in the markets. There's indecision in the markets. There is no volume. Everything will be squeezing, and in fact, in most cases, the market is going to be going sideways when the Bollinger Band is squeezing. But the moment where you see the price breaks above that Bollinger Band, the Bollinger Band is also going to expand, just like a rubber band. When you stretch a rubber band, it is going to stretch. So that means there is volatility. There's high volatility when you see a Bollinger Band that is stretching. You get it now. When you see a Bollinger Band that is big or that is stretching. But when you see that it is close to each other, it helps you to measure whether there is volume in the markets, whether there is much volume, or the market is just doing indecision. There is not a long volume that is going in the market. So for MACD is moving average convergence and divergence. And this is basically when the moving average, when it converges, that is bullishness. It means bullishness. And then when it diverges, that means the market is about to go down again. So that is just it. Okay. Okay. Someone said I should explain more on leverage in futures trading. Okay. I'm guessing overload question now. All right, no problem. I'm going to answer your questions. But one thing, before I continue answering the question, guys, if you are still confused and you still don't understand, all of this technical analysis, because I'm not going to lie to you, if you want to start trading futures or leverage or anything, even sports markets, you need a technical analysis course. Like you need it. It's very, very important. And our online crypto trading course is the solution to you. Is the solution. Now, what I'm going to be doing is I'm going to be sharing a WhatsApp number to the chat session right now. So if you are confused and you need to take a cryptocurrency course that can teach you crypto trading, that can teach you all of the technical analysis, all of the knowledge you need to know from A to Z, then message this WhatsApp number right now. Message CryptoBase Media WhatsApp number right now, and then you are still going to get it. Thank you all for listening. Thank you all for coming in. See you next week, Saturday. That marks the end of our Zoom session tonight. So thank you very much. See you all next time.